Eric Mwather with another mentorship video. It is November the 3rd, the first trading day of this month, this week. So here we are, Dow down about 40 points. And just as a follow-through or follow-up to the weekend's market analysis video, want to show you what the RSI on the weekly for the Dow Jones is doing. And we talked about over the weekend the possibility that this line, which has been resistance, if the market turns down this weekend, is negative, that could confirm resistance at that point, which could be bearish. And you can see last week the market closed at all-time highs with the Dow above 17,279.74. If the Dow moves back below that price range, that would be a failed breakout. And also the resistance coming at this level here would be resistance on the weekly. And we take a look at the Dow daily. We had discussed the possibility that the highs on the daily RSI, this line, could be where you'd find resistance. So if this turns negative like it is doing right now, confirming that this is pointing down, this is where somebody can go short. My thinking here is you can take a look at the ERY, 3 times short energy, and by way of this ETF, you can see after a nice run up, moving above, let's call it about $13 all the way to about 26, 25. That's almost a double in under 5, 6, 7 weeks. So what it's done is it's gone up, come back to the moving averages, being the 13-week moving average. And I think that there's also another view, and I want to show you that view based on the RSI, because if you go back to the RSI, let's say about 5 years, you'll see that the RSI has been stalling. Let's wait for the chart to load here. Here we go. The RSI has been stalling over the last couple of years, somewhere around there. And so as long as it has been coming to this area and finding resistance, this is when you had to get out of the instrument. Every time it came to this level and stalled, you had to get out because that was resistance. Now there's the possibility that it could hold above what has been resistance. I hope that makes sense. So underneath the blue line, sell signal. Holding on the line here as we begin the new week and the new month could suggest that it could have a chance of changing what has been sell signal to a buy signal. And that's why the moving averages could be critical. Go to the daily, and what I'm looking at here is this perfect entry level was during this move here. So there was a move at that level there, which began this move here off the lows, and the stock hasn't gone back to those lows. So this was a perfect entry level. So if that was where the RSI broke out, draw a straight line, and it would be somewhere there. You can see we've held that level before for a very nice entry level at about 13, and it was a straight shot to the upside. So what the market has done is come back to this general area here. If this is where it's turning positive like it's doing right now, trading at 1760, my thinking is this is where it could have an opportunity of bouncing if the market is going to go down. Also take note of the fact that we have the moving averages here crossing over. We have the 50-day moving average moving above the 200-day moving average, which could be at least a sign of change in momentum. The fact that the stock is also coming back, it had gone above the 50-day moving average and is now coming back to test this support level. This is where generally, not always, that a stock could have a chance of moving higher. So I think this is a risky buy because these ETFs are not the best at any point, but you take a risk here that the market wants to pull back and the stock could give you an opportunity of gaining 10, 15, 20% in a couple of days, couple of weeks. So that's the idea for you on the mentorship front. Eric Mwather, I'll keep you guys posted. I am out. Woo!